Good morning and welcome back to the Opportunistic Trader. It's 11 o'clock. Markets are slightly quiet. I'm joined by Ed Meir from Commodity Research Group. I'm very excited to talk to him about the global
Larry, I lost you.
macro market landscape and his thoughts in general. So, Ed, I'll kick it off to you and I'll let you lead the conversation wherever you like to take it with different markets on the macro space.
Okay, very good. Well, as you said, Larry, my expertise is mainly on the base metals. I've been trading base metals both physically and on the futures market as well. We look at the LME group of metals, which is copper, aluminum, zinc, lead, nickel. Of course, copper, dovetails with the COMEX contract here, the LME contract. So, uh, uh, in a nutshell, all these metals, if you look at them, they look pretty good from a fundamental point of view. Stocks are down. There's a supply-demand deficit for practically all of them. Demand is still pretty good, even out of China. So the fundamentals for all these metals are looking pretty good. The problem is they've been dropping steadily all year, basically because of two things. Growth outside of the US has been slowing, especially in Europe. And secondly, this tariff thing, it started off very slowly and very uneventfully, but it's growing in scope and I think in danger. And things are going to come to a head on November 29th, which is when President Xi and Trump are supposed to meet in Buenos Aires at the G20. Um, I think what's going to come out of that meeting is some sort of a truce will be called. In other words, they're going to just freeze the tariffs in place. They're not going to escalate things anymore from here. They're going to go back to negotiating some of these issues that is driving the two parties apart, in an effort to reach some sort of a compromise. So I think we could see a pretty good move if, in fact, this scenario comes to pass. I think you'll see a really big move in the markets heading into December if these two leaders come back with some sort of a quote unquote truce. Is no better way to describe it. And metals should take the lead. US equities also, I think, will do much better because both of them cannot afford to come back empty handed, I don't think. I'm not sure what you think about that, but that's where we see things going near term. So kind of a sideways drift between now and the end of the month, and then hopefully, if they reach some sort of an accommodation, I think you'll see a move in metals, you'll see a move in stocks, you'll see the dollar coming off a bit from here, actually quite a bit from here, um, and we'll see what happens with the talks. I don't think they're going to resolve anything once they start talking, but at least they'll give the markets a bit of a breather.
So your feeling is that if in fact there are talks, but really no resolve or results, which probably will be the case, that will be taken as a positive for equity markets as well as metals markets.
Yes, exactly right.
Okay.
Now,
Um,
if they go back, if they go back and start, cursing at each other, I think the Dow could probably drop, I don't know, 1,000 points or 1,500 points or something like that. And I think metals will really also take it in the chin because the next step will be 25% increase in tariffs on the 250 that we're currently at 10% on, and possibly new tariffs on an extra 270. So that's really going to start hurting. The supply chain already is feeling it. You're seeing producer prices move up. We have a lot of contacts in the metals industry. These guys are all in the manufacturing supply chain. They're seeing their steel prices go up, aluminum prices go up, input prices go up. So I think it's a dangerous path we're on, and we need to get off the ramp.
I agree with you. I just think that seeing seeing the individual that's handling this,
Yeah.
he needs Tummel, he needs something, and once that goes away, who is he going after? He's got to go after someone. So I don't know who
Yeah,
he's going after next, but at some point now with the mixed house, it really puts a damper on
it does.
what
It
he
does
could
put it
do
down.
moving forward. And I kind of view it in a different way, and I do agree with you. Potentially, the market takes it as a positive, but overall, I don't think they're going to be able to parse out anything that's really real. And my thought is, like you said before, and I don't even know what tariffs are really on them. I mean, they say they did this and that, but I don't know. And, I'm involved in a manufacturing company that manufactures in China. And the truth is, it'll hurt our business. It's not
It
really
has or it
hurting,
hasn't. It
right?
has or it has or it hasn't.
It has not yet.
It
We have
has not.
not seen
Okay.
any effect from the tariffs,
Right.
zero, to
Right.
the
Okay.
products coming here.
Good.
Zero.
Well, that's partly because their currency has dropped 7% this year. So,
Yes.
so their, your prices aren't going up as much.
Right. So, I don't know. I mean, I think the
Yeah.
knee jerk reaction may be higher, but I'm a little
Yeah.
leery. I'm a little leery.
No, I agree with you. I don't think they're going to, just because they're talking doesn't mean they're going to agree to anything. But at least it'll be good if they start talking.
Oh, without a doubt, it definitely makes sense, and
Yeah.
I could see it being a positive, especially because we'll be two weeks from the end of the year, and the market seasonality always is higher. So,
Right.
do you see anything in specific metals that you're looking at now that would be a benefit to talk about?
Um, Not really. They kind of move together in a herd, but copper certainly is sort of on the lower end of the range. I think it could move a bit higher. Aluminum, I would stay away from. It's quite you have these sanctions against Rusal. Rusal is a big aluminum producer in Russia. They may lift those sanctions against the company, and that could ease the supply picture a bit. Zinc is kind of in the steel space. It's had a nice move up over the last week or two, but I think it's getting a little overdone. And nickel, everybody loves nickel. Nickel is part of the electric vehicle story. Everyone is getting excited about cobalt, nickel, lithium. These are all the battery components. The problem with that story is that demand is still 5, 10 years down the road. So people aren't going to go long these things and wait and hope that EV demand picks up, and also battery technology stays the same. That's a big assumption. The technology itself could change 5 years from now or 10 years from now, and you may not need any of these metals. But nevertheless, nickel has risen quite dramatically earlier this year, but it's come off because of a variety of reasons. But certainly the EV story isn't as sexy as it used to be. Gold, yeah, I'm kind of neutral on. It's stuck in a range 1200 to 1245. It's really moving with the dollar, as you know, and the dollar in turn is moving with the trade talks. So every time you get sort of a positive spin on a trade story, the dollar weakens, and every time the rhetoric heats up, the dollar strengthens. So go figure. Sterling, I was bullish on earlier last week. It had a good run to 131, kind of backed off with all this Brexit stuff. I still think, I don't know. I'm not sure they're going to make a deal now. I was a bit more confident last week, but certainly these resignations we had last week, including the Brexit secretary, he's the guy that actually negotiated the deal, and he threw in the towel. So
Why?
I'm
Why
not
do you
sure.
think? Why do you think it's going so tough over there? And why are they afraid of what's going to be, or is it really a vote that maybe wasn't the popular vote, but somehow it won? Because
Yeah,
people
it's kind
didn't.
of like our election. A popular vote candidate won, but she didn't get in. And same thing with Brexit. They They wanted Brexit, but there was no plan as to what to do once they got it. So basically, to answer your question, if they get out of this Brexit arrangement, basically Britain will have to trade with the EU like everybody else, which means they have to pay higher tariffs on things. People have to get visas. Um, medicines will have to be re-regulated. There's now a kind of a continental blanket agreement on drugs and how they can flow, and if they're improved in one country, they're could be used elsewhere. So it's like a whole slew of regulations that will be out the window, basically. And that's what's scaring the markets. People realize that the UK is not prepared to deal with a plan B. They have no plan B. And yet the plan to leave, this plan that was proposed, is kind of half in, half out. They're not really. It's kind of a transitional plan. They say, okay, we're going to get out halfway, and then we're going to revisit some of these issues in 2 years or 3 years. So that's why the market doesn't like it. It's sort of half in, half out, and no one is really sure what's going to happen. In the meantime, she could face a no confidence vote, and she has only a 6-seat majority in the parliament, courtesy of these Northern Ireland party, who have also resigned. The Northern Ireland secretary has also resigned. So it's one big royal mess.
Oh, I know that for sure. But it was funny. You made me put a thought in my head when you were saying, when the vote on the Brit exit passed, they really didn't have a plan. And it kind of reminds me of Trump when he won the election. I wish I was a fly on the wall in that hotel room when they literally told him he won. And he was like, I don't want to win. I don't want this job. I was just doing this to see if I could win. But same thing, there's, the Brit thing is, though, as far as currency, and, I trade a little bit of British pound, but not a lot. But it just seems to be locked in this range of like 128 to 132, when they get fake headlines that it's going well, gets up on the higher end. And when it's breaking down, yesterday it got down into, I think, the 127 handle, which has been, the low, but it didn't seem pressing. It didn't seem like it was like people needed to get out so quickly. But
certainly on the charts, it looks more of a buy at this point than a sell, just on the charts.
I would venture to say, and again, this is just me speculating and looking out 5 years, I would think that this would be a utter positive for their currency 5 years out. I just do. I just think that their country is extremely strong. They're breaking away from weakness and they're separating. And, it may take a couple of years, but listen, I remember, this was my luck. The last time I was in London, it was like $1.98. So my burger cost me like $45. I better get back there soon.
Switzerland, where it was $65.
I know, it's unbelievable. So now the dollar is,
I agree with you. I think all these countries should have actually their own currencies, and they should be in charge of their own books.
Yes.
But anyway, that's a different discussion.
For sure.
Larry, what do you think of the stock market going into?
You know what? I'm a little. My thought is, seasonality. They're trying to put it in effect. What I think is very interesting about the market is they're decimating. And I mean decimating individual name stocks. Like today, it's NVIDIA down 15 to 20%. You got the bellwether high flyers really getting crushed. So, I think the market, barring really good news or really bad news, closes, they're going to try to close it positive to keep the 10th up year in a row or, positive year in a row. I do think there's going to be much higher volatility moving forward into 19 than we've seen even to this point. There's a lot of uncertainty. And again, obviously you have the China thing. I think maybe goes as a positive that they're at least talking, but I don't think this is the type of situation that you're going to get them to cave in,
No.
5 minutes. So,
No.
we got to keep an eye on that. But overall, I'm a little negative on the market. I would be more negative on it if we weren't, with 22 trading days to go in the year or whatever. But I think it's a very news headline driven market, and I don't know how you can do so well when stocks, like I'm looking at Facebook, which is like a darling stock, and Facebook traded a new year low. It's trading back where it was a couple of years ago. I'll give you, I worked at Spear Leads in 2000, and we were bought by Goldman Sachs, and the stock was at 145. That was 18 years ago. The stock has never split. It's 200. So it's only up $50 in 20 years. It's like 2 points a year. I mean, there's no return there. Listen, the Microsofts of the world, the Apples of the world, the Amazons of the world, those have been the high flyers that have really given people return. But if you take, the FANG names out,
no, there's not much there once you take the FANG names out.
I like to buy AT&T, GE, but those stocks are terrible. So, so that, my opinion is, we're seasonally in a period where it could be strong. I don't think the news is going to be that positive, but they're going to construe it as positive to get some type of rally. But I do think into beginning of 19, we're going to have heavy volatility.
Yeah, I agree with you. In the meantime, keep an eye out for November 29th.
Yes, I got it on my radar, and I will, and I appreciate you coming on and sharing your thoughts as always, and I wish you a nice weekend, and we'll hear from you next week.
My pleasure.
Thank you so
Larry.
much, Ed. Have
Nice
a great